Dear students, we will do module 44. This is income from computation of house property part 2. In this module, we will do two problems. So let us go to the first problem. Mr. X owns two houses and one portion is let out and the other portion is occupied by him for his own residence. The municipal value of let out house property is 5,20,000 and that of self-occupied house property is 2,60,000. This information is required because we have to divide the municipal taxes on this basis. 5,20,000 and 2,60,000 meaning the proportion of house occupied is 2:1. Let out house property is 2 portion and self-occupied is 1 portion. So the municipal taxes for both the houses amounted to rupees 60,000. This we have to divide it in the ratio of 2:1. Rent receipt for the let out house property is rupees 50,000 per month. The other expenses for both the houses are the following. Insurance premium for both the houses 12,000, not allowed. Annual charges for self-occupied house property 3,000, not allowed. Ground rent for let out house property, not allowed, 1,000. Repairs for the self-occupied house property 7,000, not allowed. Interest on loan taken to repair both the house properties. So this we have to divide it in the ratio of 2:1. Income from other sources 2 lakhs. Compute income from house property and total income as per the old and new scheme for the assessment year 25-26. So here we will do that. So first one is self-occupied and second one is let out. Let out. So here self-occupied net annual value will be nil. First we will do the old scheme. As per the old scheme, let out house property MRV is equal to 5,20,000. 5,20,000. Rent received is equal to 50,000 into 12. So it is 6 lakhs. So whichever is the higher value we will take. So gross annual value is 6 lakhs. Gross annual value is equal to 6 lakhs. Less municipal taxes. We have to divide it 60,000 in the ratio of 2:1. So here everything is nil because net annual value is nil. So here it is 40,000. So 5,60,000 is the net annual value. Net annual value is 5,60,000. Now less standard deduction. Here it is nil. Less standard deduction under section 24. Self-occupied house property will not get. Let out house property 5,60,000 into 30 by 100. 1,68,000. 1,68,000. Now interest on loan. Interest, this will be allowed for self-occupied house property as per the old scheme. 40,000, we have to divide it in the ratio of 1/3 and 2/3. So this is 13,300. 13,300 and next one is 26,700. 26,700. So profit or loss from house property, here it is loss 13,300. Here it is 3,65,300. How you this is profit 5,60,000 minus these two values. So this is as per the old scheme. Now if you calculate as per the new scheme, this interest also is not allowed. So self-occupied house property, no value will be there. It will be nil. Now our computation is as to compute the gross total income or taxable income, not the house property income. That's why I told you we have to read the question properly. So as per the old scheme, loss from house property. Loss from house property, that is 3,65,300 minus 13,300. So that is first house property is 13,300, this loss. Second is profit from house property 3,65,300. 300. Income from other sources. Income from other sources. Income from other sources 2 lakhs. So gross total income as per the old scheme is 3,65,300 plus 2 lakhs minus 13,300. You will get 5,52,000. Now what will be as per new scheme? This will not be there. This value will be nil. That meaning the total as per the new scheme will be 5,65,300. That is 3,65,000 300 plus 2 lakhs. So this is the first problem. Now the second problem. Second problem. Mr. A has two house properties and both are occupied by his family members for residence. Now we know that as per the new scheme, two houses can be self-occupied. So this is one problem where you have to decide which house property the assessee has to opt as self-occupied if he has more than two house properties. So as per the new scheme, if you will get a question, three questions, three options will be there. Three house property details will be there. This is as per the old scheme, but I will explain as per the new scheme also. New scheme, it's simple because self-occupied house properties, both the values will be nil. Only let out house property you have to concentrate. As per the old scheme, we have two options. So this is as per the old scheme, but I'll explain with the new scheme also. Advise him as to which house property he has to claim as let out and which are self-occupied as per the old scheme and new scheme. Particulars: house property 1, house property 2. Municipal rental value 2,40,000 and 3 lakhs. Municipal taxes 50% only is paid, 20,000 and 30,000. Ground rent 5,000 and 10,000 not allowed. Fire insurance premium paid 10,000 and 20,000 not allowed. Interest on loan taken for the construction of the house property 1,50,000 and 1,80,000. Income from other sources 2 lakhs. Now we have two options. First option is first house is self-occupied and second house is deemed to be let out. Second option, first house is deemed to be let out and second house property is self-occupied. Then we have to compare the tax liability. Wherever we are getting the least tax liability, he has to accept that as the self-occupied and let out. So option 1 we will do. One is self-occupied, second is let out. So self-occupied, everything is nil. Only the interest portion will be there. So let out house property, municipal rental value only is given. That is 3 lakhs. Municipal rental value, no other value. So that is our gross annual value. Less municipal taxes. What all is paid only they will get. So that is 15,000. 15,000. So net annual value is equal to 2,85,000. 2,85,000. Now less standard deduction. Here self-occupied house property nil. Less standard deduction under section 24. Here it is not allowed. Here it is 30% of 2,85,000. It is 85,500. 85,500. Now interest on loan. Interest on loan, it's allowed for, as per the old scheme, it is 1,50,000 and here it is 1,80,000. So here loss or profit from house property. Here it is 1,50,000 loss and here it is 19,500 profit. 19,500 profit. So as per the new scheme, what will be the value? As per the new scheme, the value will be 2,85,000, this 19,500. 19,500 because this value will be nil. Now option 2. Option 2, we will reverse this. We will reverse this option 2. This is let out and this is self-occupied. So MRV, here it is 2,40,000. Here it is 2,40,000. 2,40,000. Municipal taxes, only what is paid will be there. This is net annual value 2,30,000. Here it is nil. Deductions under section 24. 30% he will get here, he will not get here. So here the value is 69,000. 69,000. Interest on loan, it is allowed as per the old scheme. Here it is 1,50,000 and here it is 1,80,000. Now here income or loss from self-occupied house property. Income or loss, here it is 11,000. Here it is 11,000 profit. Here it is loss 1,80,000. 1,80,000. Now this is the computation. New scheme, as per the profit, it will be 11,000. This will be nil because interest also is not allowed. Now we are coming to the deciding factor. Deciding factor is we have to make a table as per the old scheme and new scheme. Option 1 and option 2. So here Loss from house property. As per the first option, loss from house property 1,30,500. 1,30,500. Next is 1,69,000. That is considering both the house properties together, plus value and minus value. Income from other sources 2 lakhs. Here it is 2 lakhs. So gross total income or taxable income, this is loss. This is also loss. So here it is 69,500 and here it is taxable income is 31,000. So we know that the least income that we have to accept. That meaning second option here is to decide, that is first house as deemed to be let out and second house as let out house property. Now if you take option 2 if you take here, income from house property is 11,000. No, this second option is 11,000. Second option is 11,000. First option is 19,500. 19,500. So total is 2,19,500. Profit, here it is 2,11,000. 2,11,000. So which option? Here also the least taxable income is for the second option. That is, first house is treated as let out and second house is treated as self-occupied. So this is the deciding factor for the SSC. So as per the new scheme, if you are getting 2 house properties, 3 house properties details will be there. 2 can be self-occupied. Annual value will be nil. 1 you have to do as let out. So 3 options you have to work out and decide which is the least tax liability. That will be the deciding factor. This is what I wanted to explain in this module. Happy learning. Thank you.